Hey everyone, welcome back to Corporate Decoder. Today we're diving into a filing from Armour Residential REIT, and let me tell you, their name's quite fitting because this report is armoured with lots of numbers. Before we start, if you appreciate getting straight insights from corporate documents, make sure you're subscribed. We also have a Discord community linked in the description below for even more discussion. This report is an 8K, which is basically a snapshot of important events happening at the company. In this case, it's about a presentation Armour put together to update everyone on how they're doing financially and operationally. So let's see what's inside this update and if it changes our investment perspective of them. This report is required by the Securities and Exchange Commission, or SEC, which is like the government's watchdog for companies that are publicly traded. This filing tells us it was triggered by an event on May 16, 2025. Essentially, it's a formal announcement of something significant. Armour Residential REIT Inc. is the company we are analysing. It's a real estate investment trust, or REIT, which means they own or finance real estate. They're based out of Vero Beach, Florida. Here's something important. Armour has different types of stocks. They have common stock, which is what most people think of when they buy stock, and they also have preferred stock, which is like a hybrid between stocks and bonds. It pays a fixed dividend like a bond, but it's still technically stock. The Series C preferred stock has a 7% dividend rate. You can find both common and preferred stocks listed on the New York Stock Exchange under the symbols RR and RR-C respectively. This section is about something called Regulation FD, which stands for Fair Disclosure. It basically means that if a company shares important information with certain people, like analysts or investors, they have to share it with everyone else at the same time. This prevents insider trading and makes sure everyone has access to the same information. Here, Armour states that on May 16, 2025, they created a presentation that includes updates on the company's financial standing, business activities, and how they operate. This presentation is statuted as Exhibit 99.1 in this report. So the heart of this 8K filing is the presentation itself. This part lists the documents included with the 8K filing. The key one here is Exhibit 99.1, which is the presentation we just talked about and is dated May 16, 2025. Let's imagine that we are able to open this presentation right now to get a better idea of what it contains. I can tell you that presentations like this usually cover things like the company's recent performance, market trends, and future strategies. Companies use these presentations to get investors excited. They include charts, graphs, and key financial data. Because we don't have access to the presentation that's listed as an exhibit, we can make a few reasonable deductions about what it will most likely include. First, the REIT will be looking to highlight its strengths. Let's explore some possibilities of what they may contain, how its approach to investment is outperforming the market overall, how the REIT is adapting to any recent changes in interest rates, including analysis of how it affects their profitability, how they are positioned to take advantage of opportunities for growth. Next, they're going to be very selective about what they show regarding challenges and risks. They'll likely share the following: how they plan to navigate potential economic slowdowns, how they manage their portfolio and debt to reduce risks. Finally, to add external context to the investment, they may talk about what they see in the wider market, like a section on the overall real estate market trends, which will show the current climate and where there might be potential for growth. TIG-TAN analysis of the wider economic conditions that are expected to affect the real estate sector. It is a shame that we don't have access to the content of the presentation, but at least we know the intentions of it. Now let's take a step back and try to put this filing into context. Armour Residential REIT operates in a complex and sensitive sector, mortgage-backed securities. This is a part of the financial world where risks can be really high, but so can the returns. When Armour puts out a presentation like this, it's essentially trying to keep everyone, investors, analysts, and the public, informed about where the company stands and where it's heading. Since they're a REIT, the focus is often on how well they are managing their properties and investments to generate income for shareholders. So after looking through this report, what can we conclude about Armour Residential REIT? The 8K filing itself is pretty standard. It's just a formal announcement that a presentation has been created. The real insight would come from analysing the presentation, which unfortunately we don't have access to. We can guess about its contents based on what would be interesting to investors, however. Broadly, remember that Armour operates in a space that requires careful management of debt, risk and interest rate sensitivity. Whether it is in a strong position really depends on its ability to navigate these things effectively and of course how well they are managing their costs. Alright, that's our breakdown of Armour Residential REIT's latest filing. What's your take on Armour's position and future prospects? Drop your thoughts in the comments. If this analysis was valuable, hitting that like button really helps, and subscribe for more deep dives. Don't forget to check out the Discord in the description. Thanks for watching. See you next time.